Hi, everyone, and welcome back to another episode on the Indicott Invest channel. Today, I want to talk about Zeta. So, I haven't talked about Zeta in a while. We're going to go ahead and talk about the stock, talk about some other things, but then the big news I want to talk about today, we'll touch on a little bit later. But first, let's hop into the stock price and the stock movement. So, take a look here. Zeta, for the past month, really has kind of just been on a little bit of a climb. So we obviously kind of hit a bottom, in my opinion. I think we bottomed in February at 14.62, which is crazy. We're now almost at $19 a share, which is awesome. And the stock's kind of just been crushing it ever since the middle of February. Look at the past 3 months. Again, it's oh wow, I didn't realize it's literally done nothing for 3 months, which is hilarious. And year to date, it's probably set down. Yeah, it's down 8%. But basically, since they're a little bit after their earnings, they've been crushing it. As we know, their earnings were fantastic, triple beat across the board, raised guidance, beat profitability. So they're doing $6 million in net income last quarter, and they beat the revenue. And I think we'll see that trend moving forward. David then hopped on Ronnie's channel, Sam's channel, Nick Wealthmatica's channel. Did a bunch of other like Bloomberg and all these other interviews on other platforms. So he's kind of going around being very confident, spewing kind of the same thing over and over again. That they're assessed on other companies or Boeing's that sort of metric or that sort of metaphor. But yeah, Zeta's crushing it, and I kind of wanted to just talk on the stock price first. Obviously, as you guys know, it's probably or it is in our public portfolio. It's battles between first and second every single week, basically, depending upon who moves more that week. And so, yeah, I'm super bullish Zeta. And the next thing I want to touch on is actually analyst price target because I find this fascinating, guys. I mean, look at this. The average upside is $29 a share, which is a 53% upside from here. And that's these price targets, just so you guys understand, as it says here, are 12-month forecasts. So when any analyst ever gives a price target, it's 12 months from the date of that announcement of the price target. And so if we look through here, I mean, $25, $30, $23, $30, $30, $30, $26, $30, $30, $44, 27, 26, 20. So again, out of all of the analysts, and not, I don't want to sit here and say that analysts are always right and you should trust everything they say. But out of every single analyst that covers this name, they're all above the current stock price today. I mean, if that doesn't scream undervalued to you, then again, they don't always know what they're talking about, but sometimes they're pretty dang good. You've got some good analysts on here, like Richard Baldry, very good when it comes to his average return, 13%. Same with Koji, also very good when it comes to their rating. You have a few other people on here that you don't really know about, but you got Morgan Stanley, D.A. Davidson, Needham, Truist, Citibank, Goldman Sachs, Oppenheimer, bunch of firms, and we kind of can see that after their earnings, a lot of buy ratings after that those earnings. So the company's doing great. Analysts believe so. Obviously, the retail community, we understand that as well. And so that's why I think it kind of leads to this next topic of how undervalued this company is becoming. So today it was announced, Jason Stein on LinkedIn, proud to share some big news. I'm launching Zeta Global in Canada as Group Vice President. Zeta helps brands acquire, grow, and retain customers through an AI-powered marketing platform built on proprietary tech stack. If you haven't heard of us yet, you will soon. This is a global company with unbelievable momentum, including 18 consecutive beat and raise quarters, scaling to 1.3 billion in annual revenue with 30% year-over-year revenue growth. Now we're bringing it north. The opportunity to launch a company of this scale in a new market doesn't come around often, and I'm incredibly excited to get started. If you're curious about what we're building, let's connect. Now, this is great news, guys. If you guys don't know, they right now, only operate in America or in the US. And so this is the first time they're expanding, quote unquote, internationally. Now, Canada isn't that international like Europe or Asia, but it's the first of many moving forward, right? I know long term they want to expand internationally. And so this is the first of many expansions. And I kind of want to, hone in on what that market looks like. So IAB, so this is the interactive, what is it called again? I forget. The IAB is the Interactive Advertising Bureau. So a pretty reliable source as to where the Canadian advertising market's going. Now, again, I don't want to say that every single advertising dollar goes to Zeta. That's not the goal here. The goal is to kind of give you guys an understanding of the TAM and where that market's heading and how much they can get from that, right? So I kind of want to talk about this a little bit. So digital advertising, and came in October 2025, is poised to surpass $21 billion in 2025. So obviously we're now in 2026. I'm not exactly sure the metrics. This is the most up to date and most relevant one that I could find. And the IAB is really relevant for this. They're the most trusted in this, specifically about advertising revenue or advertising TAM. So IAB's Canada's latest internet advertising revenue survey and forecast projects another year of solid growth for the Canadian digital advertising market, with revenues expected to reach 21.2 billion in 2025, up from 18.2 billion in 2024. The projection represents a 16.6% year-over-year increase, underscoring advertisers' continued confidence in digital media, even as a broader economy faces inflationary pressures. Blah 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 blah. So they're basically growing on a CAGR of around 20% a year, um, and it looks like they're trying to do 21.2 billion in 2025. Now, again, just want to throw some numbers out here. It's not to say that this is going to happen. This will happen. They're not just like this advertising platform. That direct number definitely applies more to like a Meta, a Reddit, and these other companies that specifically are fully on ad revenue. But it just gives you an idea of like how large the market is and for marketing and where it could go. Um, and so again, it's around a $20 billion advertising market in 2025. As we know as well, the wallet share that Zeta has in the US is about 1.25%. So if you go ahead and you apply that same percentage, that's around 100 or 210 million in revenue. Now, I think it's going to take, I would probably say 24 months to get there. In my opinion, it's not going to happen within this year. And I think it's not going to happen within the few quarters of the first of 2027. So I think it'll take a little bit, but just to give you guys an idea, I think if they get 1% market share in Canada, that's around 210 million. Now, I think there will be some overlap with companies that reside in America that also do marketing in Canada, and I think that'll be an easier acquisition for the market. So I think they could get to that wallet share pretty quick. But just to be conservative, let's say it takes 24 months to get to that 1% wallet share, and the TAM is 21 billion. That's $210 million of revenue that you're looking at, right? Now, again, something else to talk about here in Wealthmatica, friend of the channel, please give him a follow if you haven't. Makes a great post and a great just conversation piece I want to talk about is, again, the 35% year over year growth assumes zero new customers, zero growth from Marigold, which is just insane, zero Athena tailwind. So we don't know what's going to be happening moving forward with Athena. And so that assumes zero Athena tailwinds and zero revenue from Canada. Now, I don't think we're going to see any revenue from Canada in Q2. We may see a little bit in Q3, and then I think we'll see definitely a little bit in Q4. And we'll see a lot more in 2027. But again, this just kind of emphasizes, and he emphasized here, that the 35% year-over-year guidance is the absolute floor, and I 100% agree with him. They're going to smash their earnings. Yeah, which I kind of talked about before, guys. Like, their guidance, to me, was just so sandbagged. I mean, literally, like he said, Marigold, they're expecting zero growth for the next 3 years. 0% growth. They have the same growth number across the board for the next 3 years. I mean, it doesn't make any sense. Now, obviously, long term, David has said they want to get their market share to around 5 to 10%. That will take some time, right? That's not going to happen probably until 2030, let's say. And so let's say CAGR's at 20%. They get to that 5, that's as of right now, let's say it's $21 billion, they get 5%. That would then be $1 billion of revenue in 2030 from just Canada alone. Now, again, that assumes zero growth. It will CAGR probably like 10, 15, maybe 20% over the next 5 years. And so it will be a higher number. But just to give you guys just a range of like how big of a deal this is and how this is just the beginning, right? Again, they're only in the US and they're just now moving to Canada. That doesn't include Europe, doesn't include Asia, doesn't include the South Pacific, like Australia and New Zealand, doesn't include any of Latin America or Africa. Now, obviously, the US and Europe and Asia are probably the 3 biggest markets. But guys, they're expanding internationally, which is awesome. And I kind of wanted us to hone in on that a little more as well. Is, you know, again, Canada's population is only around 40 million. US is around 335 million. Um, but the digital ad market there is 10 to 12%, which means their ad spend per capita is extremely high, right? Which is exactly the type of platform that Zeta is trying to market themselves to be. And so I think it could be even a more profitable country for marketing, which I know is crazy to say. I also, something to note there too, is I think there's far less competition in Canada. As we know, Canada likes to kind of weed out the competition there and kind of, you know, conglomerate a lot of companies. That's why most companies move to America. And so I think there's even a lot more competition here for just eyes alone, also on top of platforms that they could buy. Whereas in Canada, I think there's less competition. So it might be easier for them to acquire that market share as well. Um, but yeah, guys, great news for Zeta. Expanding to Canada is awesome. Super undervalued again. I mean, they're trading like a three price to sales. All the analysts think the average stock price is $29. I think it's higher, but what do I know? But yeah, appreciate you guys supporting. Appreciate you guys following along, and I'll catch you guys on the next one. Peace.